We are recording. Weston, you know what I want to call this episode?
What?
The dog that didn't bark.
Um, I was trying to think of a Japanese year thing, but okay.
Yeah, it's like you think the dog's gonna bark, but often the thing that stands out the most is the dog that didn't
but
bark.
that's like dog that didn't bark is like nothing happened as a result, not like a nothing happened, like a bomb didn't go off, but like people got destroyed today in markets.
Okay,
Thing
let's
that
talk about those
very wrong.
people that got destroyed. Who got destroyed and why?
You want me to tell you right now?
Yeah, sure.
They basically were the short sellers. I don't know who specifically are, but there has been an insane amount of short selling. This is one of the charts. I don't know, like how do I reference a chart to you? Do I
Just
tell
just
like
tell me. I'm in charge. I'm in charge. Only I can reference it. But yeah.
yeah
So wait, short sellers of the Japanese yen or of the
of the
stocks?
JGB market? No, the JGB
Oh, of
market.
the okay, people who are short the bonds. Okay, we'll get that. Okay,
Yeah,
so folks, as everyone can surmise, we are joined by Weston Nakamura, very well versed in all things finance, but a particular expert when it comes to the Bank of Japan. And
I
the
think you
Bank of
said
Japan,
Japanese finance.
yeah. There we go. Weston, the last time we spoke, the Bank of Japan, I was going to say the Fed, raised their not their targets, but their band. So basically, the target is still zero on their 10-year treasury, 10-year JGB yield, but the band was from
Around
negative 50
zero.
basis points to 50 basis points, around zero. So basically, everything is trading at 50 basis points, and we are not talking about like, oh, the Fed's racing to 3%, the ECB is racing to 2%. We're not. That's all overnight rates, almost all the time. The Bank of Japan's rate is at negative 0.1%, 10 basis points. That's the overnight rate. I think overnight. We're talking about yield curve control, where the central bank targets a particular yield on a government security that has real duration, like a 10-year Japanese government bond market. So, Weston, what happened since then? What were the expectations leading up to the Bank of Japan meeting that just happened, and why was it such a surprise?
Yeah. So first, Jack, I just want to apologize for interrupting your vacation. That's not like a background thing that you're really on vacation, but so thank you for making the time. But it is important. So
No worries, man. Yeah.
so basically, look, like just like you said, since last time we spoke, right? So BOJ shocked markets by doing something. Today they shock markets by doing nothing. Um, but by doing nothing, I mean, like yeah. So yield curve control policy was left unchanged. That was not what not what was expected by market participants. Now, that's what was the 40 economists, except for Citigroup. 40 economists were saying they were predicting this as well, but that's just 40 people in offices. And I'm talking about actual market participants and market positioning and market activity that's been going on. They begged to differ, and they were made once again widows by shorting JGBs and the JGB market and JGB futures and as thinking that there was going to be, that the December, sort of surprise increase in the yield curve control trading band is the beginning of this, you know, long process of this Japan unwind of QE, of these like, this unprecedented decade of QE, and that is the last major central bank to, remove accommodative policy, and now we are in a total regime shift as on a global level, and so on and so forth, and we're going to double down on our bets that worked out on in December, and just keep shorting the bond market, the JGB market, and so on and so forth. And as you and I had discussed, there were reasons that BOJ did that, and then the people that were calling for this and betting on it were looking at completely different reasons, and that is why they did not see that today there the BOJ is going to be policy unchanged. So policy unchanged does not mean kind of sanguine markets at all by any means. There's a lot that certainly happened. A lot of people kind of blew up today.
Right. So JGB is a Japanese government bond. They're targeting the 10-year JGB, and by widening the band in December, because the pressure on rates is upward, not lower, basically all 10-year government bonds were now trading at 50 basis points, and the expectation was that they would allow JGB yield to drift even higher.
They would be forced,
In this,
forced
they would be
to.
forced to.
Yeah.
They would be forced to even higher, and in order to defend the yen, so that would strengthen the yen, and yields would be able to rise. And when bond yields rise, the price of bonds go down. So when you're saying short sellers, we're not talking about AMC here or GME or Tesla. We're talking about shorting a bond, and when you short a bond, you make money by you borrow it and then you sell it, and you make money if you can buy it back at a lower price. So you can buy if you buy it back at a higher yield, that's buying it back at a lower price. But they were not able to do that, Weston, because the Bank of Japan did absolutely nothing. Their policy was completely unchanged regarding yield curve control, and that caught many players offside. So people were betting that the Japanese yen, so the yen weakened. They were betting that it would strengthen, and it didn't, because if interest rates are very low, money can just leave the country, right? So the Bank of Japan defended their bond market at the expense of their own currency. Is that safe to say?
Yeah. So the yen we can get into separately, but just for now, if we're just talking about yields, sovereign bonds, fixed income, because this impacted treasuries and everything too. But basically, the Japanese government is the most indebted in the world, with a 206% debt to GDP, and it, like we discussed last time, it can still borrow money for 0.25% or now 0.5% for 10 years out, whereas the United States Treasury, these risk-free Treasury, has to pay 400 basis points or 300 basis points or whatever for just like a month or two out, right? And so that doesn't make any sense. But it makes sense in the sense that the Bank of Japan is the most intrusive central bank and most aggressive QE on steroids central bank out there. And so basically, the kind of international financial community, not just hedge funds too either, but a lot of hedge funds and the domestic Japanese community too, institutional community, is basically saying okay, that December yield curve control band widening, that was the start of this whole new era. They're gonna have to they're gonna be forced to, they're gonna be twisted, their arm is gonna be twisted into joining stopping an outlier, join the rest of the global DM central banks, and hike interest rates, or tighten your financial conditions. You are now experiencing inflation. There's a potential four handle on CPI coming out tomorrow. Four handle is a big deal in Japan, even though it's half of that of GM peers worldwide. But so people are basically looking at it through the lens of Fed, ECB sort of thing, right? Inflation is going up, you need to hike rates, and combat that, and stop with this insane QE. And insane it is, but what's the reason that's a problem is because people are not looking at the correct metrics. They're not looking at it through the correct lens, right? As you and I had discussed last time, the reason that they explicitly said this too, right? This is not like brain surgery. All you have to do is just not automatically assume that all central bankers are lying all the time. The reason that the Bank of Japan suddenly had to, after a year of just being very stubbornly holding 25 basis points cap, no matter what, at the expense of the yen, getting crushed, 33% down year to date throughout 2022 as the worst major foreign currency and all that kind of thing. And they were just we full stop period. We are not going to move on 25 basis points. That is the cap on yield curve control for the 10-year yield on JGBs. And then suddenly in December, they increased that to 50 basis points. And that's what shocked everybody. And the reason, though, that they did that is not because of any CPI sort of related, matter. It was because of there's a rapidly deteriorating financial not financial conditions, financial stability or instability, and kind of bond market functioning and market functioning in general. And that's what changed, and that's what needed to be addressed. And so that's why they had to do that. They had to just get more sort of kind of policy flexibility. That's what they were going for. Unfortunately for them, the results of that remedy actually ended up becoming, since the last time you and I spoke to now, that I actually ended up just opening this Pandora's box of fueling these like short sellers into thinking like this is capitulation, BOJ is throwing in the towel, and so let's just keep shorting the JGB market and all that. And meanwhile, and they've been under like like crazy attack since then. Just to kind of like, I don't know if you have those charts, Jack, but of like the kind of the financial conditions, or not the financial conditions, I'm sorry, like the distortions in like the JGB curve, for example.
Yes.
Yeah,
It's right here.
yeah. So you'll see. Yeah, so you'll see that this is the day before the December policy meeting where they kind of shocked everyone. That's a very messed up looking yield curve, right? Because you have the 8-year tenor, the 9-year tenor, not only yielding above the 10-year, but those were yielding above the 25 basis point yield curve control cap on the 10-year. That's a very sort of messed up thing.
Yeah, if you have the 9-year, if you have a 9-year bond trading at 100 basis points and the 10-year trading at 90 basis points, that's pretty messed up. Yeah. And the curve is not inverted. It's just that particular kink. It's unnatural.
The 9-10 spread is inverted.
Yeah.
And so that's that kind of kink is what you can visually see there is what yield curve control specifically targeting and concentrated unlimited buying at the 10-year tenor. That's what comes of that, a shape like that. So they are trying to kind of smooth that out because that's causing all kinds of problems in terms of just general trading, of bonds when they do trade, right? And since then, the black line is 1 month or one policy meeting since then, and clearly that kink has gotten worse. So that didn't really work out. And then you have this other chart of worse in liquidity, right? And you're looking at like average bid-ask spread on JGBs, which again, not the most liquid, but they're getting. I mean, the bid-ask spread is just getting wider and wider, which means there's just kind of less trading liquidity that's happening, and this is all because of a gigantic non-economic whale in the markets known as the Bank of Japan. Like buying up JGBs. But these are the reasons.
Sorry, Weston. Interesting enough, the decision to double the 10-year yield ceiling did not improve liquidity because bid-ask spreads only got wider since then.
The what they thought was the remedy was pouring gasoline on the fire.
Why? And so tell us about that. Explain that.
So basically, they thought that this is not something that they wanted to do in December, but they felt they were trying to address like this quickly, rapidly deteriorating sort of situation in the functioning of the JGB markets, and then thereby the credit markets and all that kind of thing. And they also saw that December was kind of an opportunity which to do so because, when speculators are like betting against the Bank of Japan and markets are pressuring them, and you have like the yields on what's supposed to be a yield curve control like right up against that ceiling, and you have just general commentary and sentiment, like shorting of JGB futures and just a lot of speculative bets and real money bets kind of or real money flows reflecting that. That's when they cannot capitulate, right? And that's ironically the way that it works is that the more that like markets are pressuring them to do something, the more that they do not do something. And so December was the 1 month. Kuroda has 3 meetings left at that point until he's done.
Yeah, he's the current Bank of Japan governor, and his term ends in March or April.
In April, but March is his last meeting, and then that's going to be that's seen as like a new sort of policy regime, and they're going to definitely get rid of yield curve control then at that point. But he knows that his last 2 meetings are going to be just rife with like speculation about this kind of change in policy to obviously be more hawkish and dish like these kind of 10 years of experimental levels of radical accommodation. But December was a month where they could do it on their terms. not because it's not it wouldn't be seen as like markets pressuring them to do it. So that's why they did it. Unfortunately for them, it didn't work out that way. And then the bets started piling in, and so this is what happened since then, right? So you basically have those two sort of worsening liquidity. You have bid-ask spreads kind of widening. You have the JGB yield curve that like kink in there, like getting even worse. You have corporate bond issuance that kind of froze up, right? So you had companies like Sumitomo Real Estate and a few others that had planned, debt issuances for January that they postponed because they thought, well, what if they just do it? What if they, increase the 10-year JGB reference rate again? How are we supposed to even price bonds at this point and issue bonds? You're starting to see a potential first corporate Japan default since 2017, which is a company Unizo, and the last company that defaulted in Japan was Takata Airbags. That's the maker of airbags that killed people like for years, and there's like recalls after years. That was the last bankruptcy. This is the actual this would be the first actual corporate bankruptcy, not a we killed people with our horrible product. Sort of should be out of business bankruptcy, right? So corporate Japan is now starting to kind of face the reality of what a higher yield or a non-free money environment looks like. And so all of this is occurring since they put this so-called remedy in to sort of alleviate the worsening, deteriorating financial and the instability that's happening, right? And just
Weston, can I take a guess as to why that happened?
Yeah.
Because
Sure.
okay, shorting Japanese government bonds, the Widowmaker trade, shorting the yen, for decades, right? But people actually made money shorting the Japanese government bonds over the past month, and so they piled into the trade, expecting that the Bank of Japan would continue to raise the band. And honestly, as a pretty attentive observer of like the Federal Reserve, that makes sense to me. Like the Fed does 25, and then they do 50. What's next? 75. When they go down from 75, what's next? 50. What's next after 50? Almost likely, very likely, 25. They could keep it 25, but that makes sense to me. They'd raise it from 20, the band from 25 to 50 on, again, not the actual rate, but the band, and on the 10-year. So it makes sense to go to 75. So people pile into this trade, and they lost a lot of money.
Yeah, so that's and I'm so glad that you said this, Jack, because you're not wrong to think in that manner in terms of the Fed, the ECB, whoever it is, but you cannot apply that framework to Japan. This is what you and I were discussing last time. They did this for not CPI reasons at all, right? And you don't do like the insane amount of QE for a decade to fight decades of deflationary mindset, and then just get like a couple of 3-4 handle prints on core CPI, and then just like ditch the policy. You need to make sure that like slow and variable lags. You need to make sure that this is actually going to be sustainable. But if you look at it from kind of like more of a Western sort of central banking, modern monetary policy framework, that's how you would think about it too. And the same thing that you just said just now, Fed is going to be on kind of a momentum, either slowing down or speeding up. Hiking 25 basis points, then 50, then 75, and so on and so forth, right? But that's because you and the Fed are looking at it through the same lens. They're trying to tackle inflation. You're looking at it through this is the goal, this is the enemy, and all that. For Japan, from the foreigner's perspective, looking at Japan, the BOJ is saying this is nothing to do with inflation, and then foreigners are still looking at it through the inflationary lens, and so that's why they're kind of getting it wrong. So all the foreign short sellers like Blue Bay and UBS and whatever from December that did not become widowmakers, they were right for the wrong reasons, and that's what I pointed out. Like good job having a right trade, but do you know why you had that trade correct? And if you don't, you're going to be applying a false framework to something, and you're going to double down on something that was coincidental, and that's exactly what happened.
And
today,
who, yeah,
right?
and who, so when a lot of short sellers of Japanese government bonds
Yeah.
that makes liquidity even worse, right? Because there are no buyers. The problem isn't that there aren't sellers. There's a lot of sellers. The problem is that there aren't buyers other than the Bank of Japan. So liquidity got even worse. And yeah, let's actually take a look at this chart of the 10-year Japanese government bond future, and I'll go to full screen. So folks can see this is the price, not the yield. So these bonds have some sort of coupon. I don't know what they are, but the price is 146 for par. So in 10 years, you get $100 back, but you're paying 146 for it. And because it gives you back a coupon, that's how bonds work. So you saw the huge red candle, like right below the S in futures. That I imagine was the decision on December 20th from the last Bank of Japan meeting. And since then, those bonds have been selling off,
right? Compared to,
and then that's a huge move. And then you have more short sellers, more selling, more selling, and so people were still, very short at 144, and now it's at 146. And if you're levered a gajillion times, like everyone is in the fixed income markets, you can lose a lot of money.
So the 10-year JGB futures, I used to trade those when I was at Goldman, and those are one contract is face value is 100 million yen notional per contract. They are massive size contracts. These are huge notional, right? So what I kind of that yellow oval that I've circled there, anybody who shorted JGB futures in that time frame, as you can see with that green stick up from today, you are either done or you are about to be, depending on where you shorted. But nobody has made, like, everyone got burned from that point forward for the last few days leading into this, right? And let me tell you why they did this. Okay, so from last Thursday, whatever the date was on last Thursday, what was the date? The, I don't know, 11th or something like that. But basically since last Thursday, over the last 4 or 5 trading days, the 10-year JGB yield was yielding above the new 50 basis points so-called yield curve control cap, which is a very weird thing, and we'll get to that in a minute. But over that time frame, this is basically what the Bank of Japan has done. On Thursday alone, the Bank of Japan bought 4.6 trillion yen in JGBs. That was a single day record. And to put things in perspective, 9 trillion yen is what the Bank of Japan had increased its monthly scheduled JGB buying to in December when you and I spoke the last time. Okay, in other words, last Thursday, the Bank of Japan bought half of their monthly planned amount in a single day. That was a record. Until the next day, Friday. Last Friday, the Bank of Japan set a new single-day record and bought 5 trillion yen worth of JGBs in this unlimited JGB buying operation, because there are just a ton of sellers trying to short sell and actually long sell their positions. So basically, they did 1 month worth of increased JGB buying that had the 1 month sort of allotment was exceeded in 2 straight day record-setting days. Okay, and then they also increased the amount again on Monday. That they're last Friday they said, come Monday we're going to be increasing our amount too. Then Monday and Tuesday of this week, they continued to buy more. Basically, over the last 4 days, the Bank of Japan bought over 13 trillion yen in 4 consecutive trading days: Thursday, Friday, Monday, and Tuesday.
And that's about $100 billion.
Basically around these sort of FX levels, it's basically like $100 billion. So the Fed was doing 120 billion in a month, right?
Yeah.
Of QE at the peak. So Bank of Japan basically was doing what the Fed was doing, but what the Fed was doing in 1 month, they were doing it over the course of 4 trading days, and at 1/4 the size of the economy. So it's just absolutely insane amount of hyper QE on steroids that BOJ has been doing, and so you can see in the the JGB short selling in the futures, right? And then do you recall, Jack, the last time you and I spoke, that you said that the BOJ can sometimes own more than 100% of
I do.
of an issue. Okay,
I
so
do.
Yeah, I just want to address that. So the reason that ties into so over the last 4 days, you see the if you just look up like kind of any generic yield on the 10-year JGB, you'll see that.
Yeah, and I found it. That's why I was just downloading that. We got it now. So yeah, so this is the 10-year yield starting a month ago. So at the very beginning of the chart is when yields shoot up to that 25 basis point thing. And now, over the past week or so, as you said, the bonds were actually trading above the 50-point basis curve. So yeah, how is that possible? Given that the curve, the Bank of Japan is saying that they'll buy everything above when it's 50 basis
unlimited,
points and
right?
0.0001, right? And how does that relate to there being naked shorts in the Bank of Japan?
It's so funny to think of it like a meme in meme terms, but but it's true though. Like how is it possible it's a perfectly legitimate question, right? Like the Bank of Japan is saying we're bid for unlimited, and they can do that. This is an unlimited printing press. So no matter what the notional amount that the market has to throw at the Bank of Japan, theoretically, there is a cement ceiling of a wall of buying that cannot be penetrated because the Bank of Japan has this unlimited bazooka. So how is it possible that yields are trading above or bond prices are trading below the floor of what the Bank of Japan is guaranteeing? So the way the reason that happens is basically Bank of Japan owns, as Jack and I discussed, 80%, sometimes 90%, and sometimes 100% of a particular issuance, right? JGB issue number 364, right? Let's just call it that, right? And so what happens is that you are allowed to, if you want to short something, right? You can actually borrow from the Bank of Japan. So Bank of Japan will lend you a JGB, but you can't borrow from the JGB or from the BOJ. You can't borrow Japanese government bonds from the Bank of Japan and then short sell it back to the Bank of Japan in these unlimited fixed rate buying operations. They don't allow that. However, what you can do is you can borrow from the Bank of Japan, who obviously has 50% of or more of bonds outstanding. They have plenty of supply. You could borrow from them, and then you short sell it in what's called the brokers markets, the BB market, right? And that's basically the secondary trading market of JGBs x the Bank of Japan. And they quote prices, and you can actually have an execution. And so if you actually have an execution at a level that is at a price level that is below the floor of what the BOJ is guaranteeing, the reason
below the price floor, but above the yield ceiling.
Right. So therefore you're and the reason that you get prints at 54 basis points or whatever it is because the only reason that somebody would do that is because they believe that in the near future 50 basis points is no longer going to be the ceiling. They believe that maybe 100 basis points is going to be a ceiling. And so if you short at 54 basis points and it goes 100 basis points, or in other words, if you short at level X or whatever, and then it drops much further, then that's a very, very nice return. And so anytime you see JGB 10s yielding above the yield curve control band, you can assume that those are short sellers that are doing that. And they're doing it because they feel that that's my fill to get in, but they're going to ditch yield curve control, or they're going to have to move the band, and so I'm going to make a very, very hefty profit. And so all of that, that whole week of it trading above, those are also short sellers that got burned today, right? So that's, if you combine the JGB futures, that 100 billion notional per contract, that whole 4 days of just getting squeezed out today, as well as the people that were shorting and keeping the yield, the printed yield of 10-year JGBs above yield curve control cap. That's why you saw policy unchanged, and nothing happened, and you saw JGB yields collapse into the 30 handle of basis points. A very sharp move down, and that's why
which honestly doesn't really make sense. They should be trading at 50 basis points, right?
They should be, but if the Bank of Japan, if the expectation was, if you were willing to short at a price below the floor, and then thinking that the floor was going to be lowered, but the floor remained static, you are in trouble, right? Because you were
right.
So you were expecting the floor to just drop out from underneath, and so your short would be a very profitable position. And if that drop never happens, well, you're going to have to get the hell out of your position, and then you have to buy cover and you get short squeeze. And so that's what happened with JGBs and JGB futures. Hit basically limit up today at the PM Open and all that. And so it's been a very, very sort of tough lesson is what I thought. But now you're starting to see, and then the yen strengthens off of that because it's basically a reversal of, or I'm sorry, the yen weakens off that because it's a reversal of the last few months trend in which people were betting on yields or policy divergence to converge between the U.S. and Japan, right? The yen was originally getting crushed because of the fact that you were getting very hawkish Fed, lifting rates and inflation, so therefore nominal yields in the U.S. go up, and then they're doing a relative bet versus the Bank of Japan, which is standstill dove with yield curve control capped, and so as that spread happens, USD JPY goes up, therefore you short the yen, and that was a very crowded trade and a very profitable trade. But now you're getting inflation in the U.S. to roll over. You're getting Fed funds to start pricing in cuts, and at the same time you're getting a potential perceived hiking of the BOJ, and so both sides are getting hit from and so people are
right. And Weston, sorry, Weston. So this chart shows from October or November of 2022 to January 16th or January 17th, and that actually shows USD JPY, so how many Japanese yen in a dollar actually go down. So the dollar actually weakening and the yen strengthening, which is the complete opposite of what happened over in 2022. And that happened, as Fed cuts were being priced in and Japanese yen was strengthening, stuff like that. But I actually don't think this chart includes the really strange price action that's happened over the past 2 days. So the dollar, the dollar rallied, the yen weakened on the news yesterday, and that makes sense, right? Because if people want to get out of, they don't like Japanese government bonds, and they can't.
Well,
the yield can't. The yield can't sell off. The only way for the pressure to release is through the currency valve. But then it rallied again, so it went from 128 to 131 to now it's 128 again. So what happened? That's weird. And again, this is not shown on the chart, so apologies about that. And also apologies to the audience for my audio being bad and maybe Weston's audio being removed as well. But I'm in Jamaica, he's in Japan. We're making it happen. Okay, so
I have no excuse for that. But here. So let's just do this. So because I get a lot of questions about why is the yen strengthening? Why is the yen strengthening when the BOJ is printing an insane amount of to support the JGB market and all that? All that's legitimate. And so I kind of just want to walk through what is basically happening with the yen. So if you pull up that chart of the Eurodollar futures implied volatility versus CME yen futures price, that's basically where this story kind of starts. But basically, the short yen trade was for 2022 was the global macro trade of 2022 because it was, like I said, a large part of Fed trade because it was a policy divergence trade. The reason it's a policy divergence trade is because normally rates traders would bet on where short-term interest rates, Fed funds, whatever, would be at what level at what time. But you see this spike in Eurodollar futures, right? Short-term interest rate futures. Implied volatility that reflects huge uncertainty of what the hell the Fed's going to do or not knowing what the Fed's going to do. So instead of trying to pinpoint exactly what they're going to do and all that, rates traders basically said, okay, let's just take a relative bet. We're going to bet that the hawkish Fed is going to be directionally hawkish and the Bank of Japan is going to be this weird standout dove and just have its yield curve control cap in place, and we're going to bet on a policy divergence, and that's dollar up, that's yen down, so therefore short yen futures. And that's why you see this that kind of almost a perfect mirror match of CME yen futures prices declining while Eurodollar futures implied volatility increases. It's getting hard to do that traditional instrument trading Eurodollar futures. Therefore, everyone piled into shorting the yen, and so that was a very sort of profitable and a trade that worked out well. However, in October 21st of 2022, and then you can go back to that last chart that you had up, Jack, of yen futures and the spot USD JPY. On that day, that was October 21st, 2022, at around 10:30 or 10:45 or so Eastern time. Okay, that was the top tick in USD/JPY. Okay, or in other words, that was the bottom tick in yen futures, and that was also, by the way, the top tick in 10-year U.S. Treasury yields. Okay, so keep that in mind, because anytime you hear anybody talk about, brilliant strategists and not so brilliant strategists, but people who are talking about like, yeah, October was the top in yields or wasn't the top in yields or whatever it was, I'm always wondering if they're aware of what actually caused that actual reversal. What was the flow catalyst that did that? The Ministry of Finance at that time, okay, at 10:30 or 11 a.m. on the 21st, it was a Friday, 21st of October, they did their second unilateral intervention, basically intervening in foreign exchange markets, and they sold dollars, bought yen without the permission of the U.S. Treasury. That's why I'm saying it's unilateral, although they probably had some backroom sort of wink, nod, and did that. And that basically corresponded with, you could see that like spike in volume on JPY futures. That was record volume. The only time that you saw a volume that the record before that was November 2016 Trump shock election win, where you had like just kind of macro craziness going on, and that exceeded the October 21st 2022 volume exceeded that. That was the beginning of this massively crowded short yen position that began to get short covered. In other words, position exiting, buying yen futures. And then that basically bled into a series of catalysts that called for the end of this short yen trade. The thesis, right? If the thesis is that there's going to be a hawkish Fed and a dovish BOJ, and therefore you short the yen. Well, now you're starting to get October CPI coming in at 7.7, then November CPI coming in at 7.1, and so inflation is starting to kind of top out and roll over. Then you're starting to get like recession fears starting to creep in, and then you start to suddenly get BOJ to start to lift rates in December, and all of these things are causing this massive what used to be overcrowded, now it's becoming less and less crowded, but still has a huge net short position on positioning on CFTC like commitment traders data for this like short yen futures position. And so when you see yen strength happening, it's not it's basically what that is that it's traders once again betting that the Bank of Japan is going to ditch yield curve control or expand the bands or whatever, and therefore they're going to be more hawkish. Therefore, you're getting policy convergence, and that's why the yen is the yen is going up, because traders are exiting their positions. They're buy covering, so they're not buying the yen; they're exiting a position, right? So there's which is a huge difference. And so when you see the yen, just rallying like this, it's just keep that in mind. It is not, and when you think of like, shouldn't the yen be depreciating because the Bank of Japan is printing an insane amount of money and all that kind of? I'm not going to get into the whole like central banks do or don't print money in commercial bank. Like I'm not going to get into that. Just how about
it's not like that someone finds the answer to that question and then they get a reward. It's just like it's. You're debating, you're reading the holy text, and someone has one interpretation, someone else has another interpretation. Yeah.
Either way, like whoever the hell prints money or whatever, or doesn't print money, it doesn't show up immediately in price action on a tick-for-tick basis, right? So that wouldn't really happen either, right? And so what's going on is basically that. And then the second thing is that I hear about is shouldn't the yen be appreciating because now you have yield. Okay, so yields are higher in Japan for the first time in forever. And so you're going to get this massive repatriation of overseas capital back to Japan, because Japan is the largest foreign capital allocator, and so they're going to be pulling money out of treasuries, out of real estate in Europe out of Australian sovereign bonds, out of CLOs, whatever it is.
Why? Because Japanese government bonds are yielding 50 basis points.
Because Japanese government bonds are yielding 50 basis points, but also because hedging costs and FX are wiping out all the nominal spread, yield spread premium and all that. And basically, why take FX risk that's insanely expensive when you can just have, FX free, be FX free and have, the Bank of Japan backstopping you still with a put, but with a higher yield and all that kind of thing. And so there's this notion, there's a lot of this like narrative is now being talked about, the Japanese like money coming, like being repatriated, and that's going to flow out of treasuries, and it's going to therefore, the marginal buyer on of U.S. treasuries is now going to be gone. All that might be too okay, but here's what I'll say to that. First of all, 2022, the Japanese institutions, Japanese insurance companies, pension funds, all that, they've already sold a record amount of their holdings. Now, they still are the largest creditor to the United States. They still hold over $1 trillion in U.S. treasuries, but they are currently underweight, and a lot of that already took place. Second of all, I'm not sure that they're rushing into JGBs right now, because the Bank of Japan just pulled the rug out from underneath them, and if they think that they're going to be doing that again and again and again, and they're on some sort of cycle like that, JGBs are not touchable at all right now. So that's not really happening. So right now, it really is just this massively crowded short positioning that you're seeing take place. That's why you get yen strength and dollar weakness, and that's why today, when you didn't get a policy change, you didn't get a further policy convergence. That's why you're getting reversals in sort of the yen to weaken once again, temporarily.
So what do you think happened? How many more meetings are there before Kuroda leaves? And what do you think happened in these meetings? And who do you think his successor is? And what do you think that person will do?
I don't know who the successor is, and I don't think it matters. I'll tell you why. But Kuroda has 2 meetings left, but he is speaking at Davos on Friday. And that is a significant sort of thing, because I was talking about this I had a long Twitter Spaces that you should check out. It was like 3 hours long with Emma Newman, but I basically laid out my entire view of what's going to happen today and kind of played out exactly as such. But
and also, Weston, I want to say you nailed this. You've called that the Bank of Japan would not raise their yield for control, so you nailed this, and I think I just want to give you the credit that you deserve.
Thank you, thank you. I appreciate that, and it wasn't difficult to do. It's just because you just have to follow the correct metrics, like get CPI over your head and all that kind of stuff, right? But yeah, so basically, this is the kind of timeline of events. What I said was, the Bank of Japan is going to release their policy, right? When they release their policy, that's going to happen around noonish or so. And when they do that, don't read into the market price action, because it's not even the BOJ Governor Kuroda's press conference, right? You gotta at least wait for that. Normally, that's how it'd be. But I would also say that you also have to wait for this Davos appearance that he's making, because apparently he just did this within the last 48 hours or so of booking this flight to Switzerland and going to make this Davos appearance. Why is he doing that? And because that time frame is also when he kind of would make up his mind as to what he's going to do for today's BOJ meeting. So apparently he has something to tell the foreign international press or the international community, foreign financial community, the financial elite, about something that he did today, such that he had to jump on a plane immediately after the BOJ press conference today. And so let's see what he has to say. Maybe he's just trying to use the last kind of free trip that he gets, that before he has to start paying for things.
The last free plane ticket, yeah.
Last free plane ticket, but I seriously doubt that. And let's also keep in mind that this was a guy who would go to Davos to lie about something. Governor Kuroda, this is from Davos. Governor Kuroda, are you going to be cutting rates negative? Or was there negative interest rates in Japan? No, no negative interest rates in Japan. 1 week later, negative interest rates in Japan. So this like so let's not like forget that like although he has been very kind of careful about not shocking markets except for December, that he has that in his blood still. And if he's like a second semester senior on his way out, I mean, like crazy things. He could say something like very crazy, like or not. But just don't let your guard down. Like he's jumping on a plane for a reason. And he's almost 80 years old, and he's not there to go skiing or something.
Yeah,
so
he doesn't.
He has something to tell the foreign investor community, like the foreign international community, badly. So keep that in mind in the near term. The story is not over yet.
And what do you think Kuroda does over the next 2 meetings? And what do you think he says at Davos? What does your gut say? Obviously, no one has any idea, but what does your gut say?
Yeah. So if a day before you and I spoke last time, I could have given you kind of my thoughts as to what's, I would have said like the Bank of Japan's going to wait until the new governor comes in to change things and all that kind of thing. Since that day and then subsequently, until current and still, I believe that anybody who's making sort of predictions about what the BOJ is going to do or not going to do over the next, meeting or after the next few months or whatever, they're going to have to revisit that, because this is something that is the Bank of Japan situation is changing on a day-to-day, intraday, intra-meeting basis, right? Like in December they increased the amount of JGB buying that they're going to do. Then they exceeded that in 4 days, and then they increased it again, right? So this is literally like they're going like day by day, or kind of intraday and intraday and intraday. So I couldn't tell you. I have no idea. They are not. What I will say is that if they do kind of if they do further increase the bans on yield curve control, which I don't think that they're going to do, but if they do that, it will not be as it hasn't been this whole time because of anything CPI or inflation related. It's going to be because of financial conditions kind of related. And so that's kind of what you have to really look at. But I think that they really learned their lesson as like, we can't ever do that again, is what they're looking at. And then so I think that you're actually my kind of non-consensus view. And again, this is subject to change because BOJ is subject to change all the time, but they're probably not going to change anything for some time, even after with this new person. And then whoever this new person is, by the way, it doesn't matter who it is. It might matter for that short time period, but kind of longer term, like a few months in the role. The ghost of Kuroda is going to be haunting the Bank of Japan, next governor, and then the next governor, and the next governor, and monetary policy, and just Japan and the world as a whole forever, because you cannot undo the policies that he's done. You can't buy half of the sovereign debt market and then starts. What are you going to do? Like QT? There is no QT. There's no unwinding. There's no selling JGBs into a market that you've destroyed liquidity on, that doesn't trade, that you set the prices on, that you own half of, and that doesn't exist anymore. Like if you want Japanese yields to be at like 15% or like looking like Argentina, as they should, then go ahead and start selling, right? But otherwise, the Bank of Japan has to keep doing some form of yield curve control. You can call it whatever you want to, but Japan can't. There's no QT, right? So there, like that's people are going to be stuck with it. Like
that makes sense. Weston. My question is, so Japanese stocks like the news, right? Nikkei rallied. Do you think that this is all in all bullish for Japanese stocks?
In what time horizon?
3 months.
No, I don't. So I was long Topics banks, for example, after this December thing, right? And it was like long.
So that's a bank. It's an index of Japanese banks. Yeah.
Yeah, but like the large ones are, MUFG. These are US ADRs too, like MUFG, Mitsubishi UFG, SMFG, which is Sumitomo Mitsui Financial Group, and then Mizuho Financial Group is MFG. And so those three have rallied just like, I don't know, like so I had like a 23% gain from when you and I spoke to Monday, where I want to close everything out based on this no change, sort of outlook that I had. So those stocks basically kind of, you know, kept like they're moving kind of inverse to the index, the broader index, and then you had a kind of a flip today. But the Japan is actually kind of in a weird situation. The equity market, it's actually trading very independently. It doesn't just follow the E-mini or like what happened overnight with SPX and Nasdaq and all that. It is kind of like independently trading, but I don't see that happening because I just don't see any sort of inflow into Japan with this kind of broader mentality of the international community thinking about Japan is going to be hiking rates, sort of thing, right? And so if that's the broader sort of if the index is more or less based on foreign capital inflows or outflows, and the predominant thinking of the international community is that Japan is going to get more, tightened policy, then they're not necessarily going to be going long that. However, I will say, like, kind of as like an interesting sort of not trade idea. This is not trade advice, obviously, but the bank stocks have been rallying, like really breaking out to like multi-decade sort of levels, right? And they're doing that because you have a steepening of the JGB yield curve, so therefore you have net interest margin and all that kind of stuff, and potential net interest margin. You have something like Bloomberg did some calculation where Sumitomo Mitsui SMFG, for example, for every 10 basis points increase in 10-year JGB yield is like a 20 billion operating profit positive like impact or something like that from NIM and all that. Great. In September of 2022, these three mega banks booked 200 billion yen worth of unrealized losses from JGB on their JGB holdings because of rising yields. And that was
same in the US.
Yeah.
They say rising yields are good for banks, or at least that's what they tell me. And they are for net interest margins for the reason that you say, especially a steep yield curve. But yeah, when interest rates explode higher, your JP Morgan has treasuries. Yeah, I mean, there's like close to $500 billion of losses, mostly unrealized on the U.S. bank balance sheets. And I'm not surprised to hear it's no different in Japan, although probably worse.
Yeah. So basically, I just I was long, and then I just basically took my house money and I just bought puts on that are going to expire like a little bit post earnings, just in case they say, like, by the way, nobody wants to borrow money, so this like NIM spread does not apply.
On the banks.
And by the way, we have like a massive like what?
You bought puts on the banks.
Yeah.
So you bought the banks big time. They went up a huge amount, and then you shorted them. That's pretty gangster.
I didn't short them. I'm just gonna play potential downside just in case.
So you still own them. You still own them, but you just bought puts on them.
Oh no, I got out of them because I mean,
your delta is negative. That's shorting them. Buying puts is
yeah.
Okay,
playing the downside.
Playing the downside. There we go. All right, Weston. Well, it's been great getting to pick your brain. People can find your work on @AcrossTheSpread on Twitter. Of course, I'm @Jack Farley. And wild times ahead, Weston. Thanks so much.
Yeah, thanks so much for having me. And let's do this again. We're on the meetings are gonna get crazier. So let's do this again at the next one. Kuroda's last one.
Count on it.